All right, welcome back. Joining us virtually right now, we have our local CPA, Robin LeBlanc, on the line. Robin, good afternoon. Thank you so much for being here today.
Good afternoon. Glad to be here.
All right, so we are talking about the 529 plan. Go ahead and break this down for us.
Okay, so parents a lot of times want to save up for education for their children. Well, the IRS has what's called 529 plans or education savings account, where they're a special type of savings account that you can put money into and the earnings grow tax-free. So in a regular savings or an investment account, all those earnings you accumulate over the years, you have to pay taxes on it. But with these education accounts, all those accumulate tax-free. You don't get a deduction federally for contributing to these plans, but if you open what's called the Louisiana Student Tuition Assistance and Revenue Trust, shorter known as a START account, you can contribute up to $2,400 a year per beneficiary and deduct that on your Louisiana return. So that's up to $4,800 a year deduction for married filing joint individuals. Now, there are two types of accounts. You can either do it just for college or you can do it for K through 12. So that K through 12 is ideal if you know you're going to send your kids off to private school. You can contribute annually and then take out $10,000 a year to cover those expenses. Now, the college plans can also be used to pay down student loans. So you can create these for your grandchildren, for your nieces and nephews. And if anything happens, you can actually roll these over into different accounts for different beneficiaries. So, because we don't all know if our kids are going to go to college or what they're going to choose, or if they get an opportunity later, like go into the military where education is free, you can roll these accounts to another beneficiary. And if you're an adult, you can actually roll it back to yourself and go to college later in life and have all these earnings come out. And if it's a Louisiana account, you can get that tax deduction every year you're contributing. And if you have the Louisiana START account, your beneficiary doesn't actually have to go to a Louisiana university to be able to use those funds. They can go to any accredited university. They can even do certain study abroad programs that qualify.
This is really, really cool. I learned something new today, Robin. Thank you so much for coming on to break this down for all of us.
You're welcome.
All right, guys, if you want to rewatch everything Robin just said, head to our website, klaf.com. Before we go to break, though, let's check in with meteorologist Adam Olivier.
Well, looking at that afternoon forecast here for Eunice, temperatures climb into the lower 80s and some thunderstorms will be around. I'll have the latest for you on rain chances